If you're trading crypto without understanding liquidity, you're missing out on a key part of the formula to succeed in trading crypto. Today, I'll break down exactly how liquidity drives price action, why market makers constantly hunt these liquidation levels, and how you can leverage tools to improve your current trading strategy. The first thing we're going to cover today is what is liquidity. Liquidity, simply put, is the fuel that moves markets. In crypto, liquidity usually refers to where traders' stop losses and liquidation points cluster or meet each other. Market makers aren't here to help traders. They they exist to make money by moving prices into these liquidity zones. To better understand liquidity, you also have to understand that market maker has motivation behind these liquidation zones. Market maker hunts for liquidity because that's where large numbers of traders are forced to exit their positions. Think of it as if shaking a tree. Market makers force price to certain liquidation zones and then shake people out by triggering stop losses and forcing leverage traders out of their trades. Why? Because each liquidation creates transactions that ultimately the market maker profits from. Now, you also need to understand that market maker has two main objectives. The first one is going to be maintaining balance in the charts, and the second is going to be hitting these key liquidation price levels and triggering liquidation so that he can profit from them. Also know that these crypto exchanges partner and work alongside these market makers to achieve those two objectives: balance and triggering liquidations. So they pretty much work together. All right, now let's look at Coinank's liquidation heat map. This is one of my favorite tools to use when looking at liquidity. It is a free service. They have a paid subscription, but for everything I'm going to show you today, you don't need a paid subscription. You can use the free model. So you're going to hover over derivatives, go to liquidation heat map. The heat map is going to pop up. You have a few things. So you have color options between these two. I like to use the green and yellow. Then you have coins you can choose from. We're going to stick to Bitcoin and Ethereum because that's all I trade. And then you're going to have time frames. So this liquidation heat map tool visually highlights where the most significant liquidation clusters are forming in real time. If you notice these bright green and yellow zones, these represent heavy liquidation areas where traders usually are in high leverage trades like 50x or 100x, and they're likely to get liquidated. By monitoring these areas, you can gain insight into where market maker might push the price to next. So I'm going to break that down a little bit more. First off, we have a scale here. So this scale shows 0 and then the highest amount, which is yellow. So 0 is purple. So if you look in this area on the chart, it signifies 0 interest for liquidation levels. And if we go to the green and yellow, it signifies, larger amounts. So right here we have, Ethereum. We have the price action for Ethereum. So as we stand right here, these levels above us signify traders that have entered very high leverage shorts and they're speculating on the price going down. But if the price doesn't go in their favor and it moves up, it's going to trigger their liquidation. So Ethereum right now is at around 1588. If we get to 1596, $38 million of margin calls or liquidations will be triggered, followed by an increase in price. We would see, 1604 get hit at 59 million, and then 1612 get hit for 101 million. And then it's the same thing below us. So these traders are in very high leverage longs, speculating the price is going to go up. And if the price doesn't go in their favor and comes below, their liquidations get triggered and they get margin called. So another thing is, this takes kind of a bit of time to get used to, but you should pick it up sooner or later. Shouldn't take too long. So once we've already a liquidation key area has already been hit, instead of it showing in front of price action, it's going to show behind. So you see here we have these two spots that are behind the candles. That means that these areas have already recently been triggered or hit. The ones that are in front of the candles are liquidation areas that are still that still exist. Now we're gonna zoom out a little bit more and look at how the zones fluctuate as you take as you look at these larger time frames. So as we can see here, we're already seeing a bit of a different perspective for these key liquidation areas. So here, for example, on the weekly, and this yellow area signifies the highest point of interest. It's 800 million, and we have right around here, 800 million at 1532, 731 million at 1528, and yeah, and then we have some above us. So the reason this fluctuation is happening is because on these smaller time frames, we have people that are in higher leverage trades, like say 100x or 50x, and that's why these critical liquidation areas are so close to price. But then when we zoom out a bit, you see that the key areas are a bit further from price. It's because these traders are more likely using lower leverage. Well, it's still high, but they're using 20, 25x. They're not they're not in 100x trades. Now, the reason I can say that and I know that is because there's another tool that we're going to be utilizing that allows you to look precisely at these leverage trades and what leverage they're using. But first, I'm going to finish covering Coinank and its liquidation heat map. So we're going to continue zooming out just to try to get you to see the the perspective of how things can change once you zoom out. And then you can go all the way down to the yearly. Now, for my trading style, I scalp and swing. I've been favoring scalping lately based on all the volatility that's been active in the crypto market. So what I use the liquidation heat map for is, again, I look for, does market maker have motivation to push price a certain direction? And to determine that, I look for imbalance. So I'll typically look on the 3-day or weekly if I'm scalping. And what I'm looking for is, are liquidation levels heavily favored on one side, whether it be above us or below us versus the other? So right here, I'm just rough eyeballing this right now. We've got about, say, like $1.5 billion of short liquidations above us, and below us we have maybe like 2.3 billion liquidations for people longing. Now, that might sound like a big difference, say 800 million, but it's not enough for me to give me confidence to use that in my trading setup. But let's say if above us we had, say, $3 billion of liquidations for shorts, and below us for longs we only had, say, like 500 million. That's a pretty significant imbalance. And if you can, in conjunction with that, you have other signals. Maybe, right now we're trading in this range right now for Ethereum. Let's say right here, there's some large buy walls and some large support for Ethereum. And then also, for whatever reason, we have a lot of momentum. It could be some indicators. It could be the stochastic RSI. It could be news, maybe Trump just tweeted something, like literally something like that. And when you combine all those things, you can get a high probability of price favoring a specific direction, especially when there's a large amount of liquidations or a large imbalance. That's what I found. So that's the approach I use to using this heat map to give me more advantage for my trading setups. Now, so once I find the imbalance, I will then it comes down to my entry. If the imbalance is above us, there's too many people shorting. Let's say price has already retraced a bit. We're at a critical support level. We've got volume coming in. Again, there's momentum. That will give me confidence and conviction to enter that trade. And then I will set my take profit in this area or this region. So typically when I set a take profit and a large cluster of liquidations like this, I'll either set my take profit literally just into depending on how good my setup is, just into the bottom of it, because more often than not, I do see us barely take one key area or two and then retrace and maybe take some from the liquidations that below us and do the same thing. And then sometimes, if market maker is really incentivized and there's a large imbalance, we do get him bringing some volume into the market, and we'll literally pump right just to these high incentivized areas where there's large amounts of liquidations. I've seen it hundreds of times. Literally, we'll push up right to them, and then we'll retrace. So that's how I enter trade setups using the liquidation heat map. Now, another thing I will factor into once I'm in a good trade setup and I see we have that imbalance above us or below us. Let's just say in this example, it's above us. And let's say I'm really trying to maximize the profit I'm making in that trade. And I'm trying to decide how between either taking profit right in the beginning of the cluster, or if I want to try to target the middle or above it, And one of the ways I determine that is by taking a closer look into these liquidation levels. And the way I do that is by using this other tool. All right, the last thing I want to show you for this heat map with Coinank is that sometimes I'll go on the much larger time frames, like let's say the 6 month, and I try to really look at the bigger picture, especially if, for example, on the fear and greed index, we're in an extreme full greed state of the market or an extreme full fearful state of the market. Let's say like right now, let's put this into a real scenario. So right now, we hit bear market fear levels, literally like we hit 10 on the fear and greed for crypto just around a month ago. And we've still been pretty low around the 20, 30 area. So that would tell me, hey, if we're hitting bear market fear and greed index levels, that we should at least see a strong bounce or reversal sooner or later. So one thing I would do if that was my logic is I would come to this heat map and I would say, okay, let's take a look at where all this open interest for liquidations is at. And if you come here, we don't go much lower than about 1400 because we've got all these people that are shorting above us, all this shorting pressure, selling pressure. So this would tell me, hey, price midterm to long term is more likely to favor to the upside. Whether it's to this area or to this area, that's another question, but I would say it's definitely favored to the upside sooner or later, midterm to long term. Short term, price could still come down to these key areas and take these liquidations. Another thing to factor into this is you have to factor in time. So just because the interest looks like this right now for these liquidations, it can change over time. So let's say that we keep trading sideways for another month or so. People could start getting impatient and thinking, hey, since we're not going down, we're probably going up now here pretty soon. And they could aggressively open up longs. and the liquidation levels here, the clusters can really get bigger, and that can incentivize market maker to bring the price down, grab that liquidity, and use it as, rocket fuel to take us higher. So you have to factor in, time. You also have to factor in that for trying to consider how things might play out midterm to long term based on open interest and liquidity. You have to go by Bitcoin, because even as good as right now this chart looks, or these levels look for liquidations for Ethereum, they're all 95% or above us. And I'm going here on the year to see how it also looks. Sometimes also, guys, when you go to the larger time frames, it takes a little bit longer to generate. I'm guessing because they're scraping more data. But you see on the yearly here, it's like we've already taken out, few billion of liquidations here. We've taken out a few billion here, and it's like, and there's only a small amount remaining, right? So it's like you would think we should be coming up at least to these levels before going lower than you know 1300 or so. But you have to follow Bitcoin because Bitcoin's king. So what I do when I'm trying to get a midterm to long term perspective, again, I'm just using this as if it improves my conviction by 5, 10, 20%, whatever it may be. That's what I'm using it for when I'm talking about trying to predict potentially how price may play out in the next midterm to long term. I'm talking weeks to months. So I'm not just using this one thing to determine that. There's other things that play a role in that, but it definitely helps a bit. So here we're looking at Bitcoin. It's taking a little bit of time to generate, but what I'm going to cover is we see Ethereum's open interest for liquidity looks highly favored. It looks like there's an imbalance to the upside as far as for the macro, for the bigger picture. Now we're going to see what does Bitcoin's look like. So here we have the 6-month liquidation heat map for Bitcoin. So when we look at this, there's really not much of an imbalance as much as there is with Ethereum's liquidation heat map. So, Bitcoin has plenty of gas or fuel to come down here to these price targets. And as we know, when Bitcoin drops, alts drop even heavier. So based on looking just at this heat map at Bitcoin's, I would say my conviction for what I was breaking down with Ethereum just now, wouldn't be as strong because ultimately, Bitcoin, everything's gonna follow Bitcoin. All right, guys. So now I'm gonna go back to Ethereum's heat map. We're gonna look at this on the 12-hour. So now, earlier I broke down is you see these clusters, you kind of get an idea of what's going on, but you can only take so much away from it. Now I'm going to show you a tool that allows you to precisely see what's going on in real time. And we're going to do that utilizing this tool. Now we're going to get even more precise using the liquidation levels indicator by Leviathan on TradingView. So with this indicator, you can see the exact liquidation points down to the leverage. It's broken down by 100x leverage traders, 50x, and 25x leverage traders. Now, here is the name of liquidation levels by Leviathan. Okay, so here we have it broken down. So you see we have these red bars. These red bars signify people that are opening up trades with 100x leverage. The ones below price are longs. They're people that are speculating the price is going to go up. The ones that are opening them above us are people that are shorting, speculating price is going to come down. And then the purple lines are people using 50x leverage, and the blue lines are people using 25x leverage. Now, these are just the settings, the colors I set for the settings. I think by default they're going to be a bit different, but yeah, this is how I have it labeled. So the other thing is, notice some of them are small and some are larger. So the ones that are small mean that the trade size is small. If they're longer, that means the trades are bigger. Now, we're gonna show how this plays out when watching it in real time. So I'm gonna go back to this candle. I'm gonna look at this on the 5-minute. Get this nice and big for y'all. All right, yeah, we'll do that. All right, and now we're going to watch this play out. So as this price action plays out, you're gonna see these bars start popping up. And again, what that means is that these people are opening those high leverage trades. So again, you see prices playing out, people are starting to open some of these high leverage trades. Okay, and so now you see price came down to these 100xers that were longing, and then the bars disappeared. So when the price reaches those bars and the bars disappear, that means that those traders got, liquidated. All right, so we're playing this out, so I can already see that we're in a range, but I'm going to draw it out so that way everything can kind of make a little bit more sense. So we're going to label this range. If we got 2 points of contact. All right. Make sure we got these level. Okay. So we're going to continue playing this out. We're letting this play out. Sorry guys, I just want to make sure that range is right. Okay, so one of the things that commonly happens, guys, is it can happen on any time frame, but it happens often on the smaller time frames. We will get into these ranges and have choppy price action, which is literally chop back and forth. And while this is happening, you've got traders that are over trading or getting caught in this, and they're opening these high leverage trades, right? So that happens, and when that happens, often you get people that get liquidated. They're just trying to trade. It's just too tight. This range we're talking about right now is only literally $8. Between we're talking about 0.5%. So price action is playing out. Look at the liquidation levels that have built up below and above. Also, these have also been increasing above, that are a bit above us and a bit below us. These are those 25xers. Those are also even increasing, but typically I the 100x and 50x leverage trades are what you're going to be looking at when using this indicator. All right, so we're still in the range. We just deviated out of it, broke out of it, took out those liquidations. Now look what's going to happen. Now we're having people, we broke out of the range. We had some people FOMO into some shorts. They started opening up shorts. And now their liquidation levels are literally right in the middle of the range. What do you think is going to happen? We're going to literally return back to the range and these people are going to get liquidated. That's what happens kind of over and over. Again, liquidations within the range. All right, some of them got taken out. Still in this range. All right. Now we're going above the range, taking those liquidations. As we're going up, now people are FOMOing and opening up longs now that we're out of the range, maybe thinking, they might be thinking maybe this is it, we're going to be going up now, but, we're not. All right, and now we can see more liquidations in the range are getting taken out. Okay, so I think now that should help you get the idea. Now, something else that often usually plays out, so you see right now these 100x liquidation levels are building up and we're coming and chopping back and forth and taking them out. Eventually what will happen is these 50x liquidations start to build up themselves too, and then we'll start and go and taking out those two. So this indicator, so that just gives you a better understanding of how this indicator works. Now I'm going to show you one of the ways I use it. This range, this is something you can't trade. It's too tight or small. Maybe if it was a larger range, like something like this big, that might be different. But yeah, it's too small. So I'm going to get rid of this. All right, now as we go to higher time frames, what you're going to see is we're going to start to see less 100x leverage trades and start to see more 50x and 25x leverage trades. So this is the 30-minute. See, we're seeing there's not really a large clutter of 100xers. There's some out here that are spread out a bit more. Some of those ones that got lucky and they didn't get stopped out when price was really close to them. But more so, there's a lot of 50x and 25x leverage traders. Same thing here again, look, very small amount. It's more of the 50 and 25x leverage trades. So typically when I'm scalping, I'll look at the 15-minute and 5-minute and 1-minute whenever I'm using looking at these. Now, what I want to show you is the correlation between these liquidation levels and what's showing on the heat map. So for Ethereum, I'm going to refresh this. We're going to look at where our current liquidation levels are at. So right now we've got 1596 to about 1620. So let's label that out. So 1596 96, 1620. All right, so right above here to 1620. So we got those levels, and then if we look below us, we've got 1580 to 1552. Oh, yeah, 1580 to 52. Okay, so now that you have, you kind of get a broader understanding of the liquidation levels here, you can get a deeper understanding, more detailed. It's like, okay, I see there's X amount of liquidations here and here, but when you go here, you can see how many are, which are more aggressive, which are using, which clutter makes up a portion of more 100x leverage traders versus, the 50 and 25x or so. As we can see, the bottom portion, we've got more people on the 100x leverage trades. So there's really like a lot to break this down. It's not that simple. So I want you to understand that. But from my experience of looking at this indicator and the liquidation levels, sometimes when I'm trying to time reversals, I will see that once we've taken a lot of liquidity out, right? Let's say price moves up here, it takes out all this liquidity, and then as we're up here and we're just maybe consolidating, waiting if we're going to go higher or lower, what I see sometimes is that a lot of 100xers may start trying to, let's say, long it. Yeah, we might have just a lot of 100x leverage trades building up right below it, but above us, there's literally none. They're non-existent. Maybe there's just like one guy like thinking, okay, I'm gonna short this, like, while everybody else is FOMOing. When there's an imbalance like that, which can also lead to, you know, depending on the time frame you're on, the smaller the time frame, the more short term the play is going to be. The larger time frame you're on, the stronger the movement or continuation of that direction the might be. So those are things that as you spend more time looking at this indicator and these liquidation levels on a small scale or time frame like this, you'll be able to notice, and then you'll be able to use to improve your trading. Now I'm going to show y'all a setup I was looking at earlier for a scalp. I literally missed it by a few seconds because it just price action got away from me too fast. So let's see, when did this happen? Oh yeah, it was right up here. So I'm going to play this out. Okay, so yeah, it was right here. So we were around these price levels. Click replay. We're going to come all the way back here. All right, so what I saw was we were right around here and we had a lot of momentum coming up. We're coming off some moving averages and we just had a lot of momentum coming up. And I thought, the market maker is gonna try to attack this zone, try to take this liquidity. At least he's gonna take one or two of the zones. And so I was like, let me look at getting into a long here. And again, yeah, price just moved too fast and I couldn't yeah, it wasn't at a favorable spot for me to enter. So I just watched it play out, but it literally played out just how I thought it would. So This is it playing out right here, the move. So again, we had around right here at around 16K, we had that 1600. We had that 64 million of liquidations, and then we also had more fuel above us. And I was looking at it right around here, so that's like it's like almost a 2% move for scalping. It's not bad. And then what ended up happening was market maker literally stepped in and he just grabbed that liquidity. So we went up, we grabbed it. One last thing, guys, I have to mention this because my bad. Hopefully, for those of y'all that are watching this whole video, you'll be able to get the most out of this. But when you're using this indicator, you have to type in you have to look up the perpetual ticker. So you have Ethereum USDT on Binance, but then you type in .p and it'll bring up the perpetual contract, which is pretty much the leverage. Yeah, the leverage ticker symbol, which is what you want to use, because if you don't use it, these liquidation levels they won't pop up. Okay, now getting back to this, yeah, market maker, he pretty much stepped in. You see here he brought us to 1616, but we didn't take that liquidity out because this liquidity is for the spot price. So if we look at every exchange is different also for liquidation levels. So price action also plays out differently on some. Yeah, spot we came up to 1616, but we still didn't take it out on the heat map. So for whatever reason, yeah, this liquidity is still gonna be. But typically it only happens by a small offset. It's not like a huge amount. So yeah, market maker, he steps in and sees this, the opportunity. He helps take the liquidity. He comes in here and he reveals himself through what's called um, vector candles, which pretty much helps show the volume or footprints in the candles of him coming in and creating the momentum and volume to push price a certain way. And then he ultimately does that again to try to take the liquidity, and then he waits and sees if retail will hop in on the move to help him push the price to where he wants to go. And then if they do, he'll step in again and try to continue pushing price up. But right here, what happens is he steps in and we just get to this price level. And then something you notice here is as price is consolidating or ranging up here, we see a lot of 100x leverage traders and 50x traders that are trying to long this now. They're FOMOing. Meanwhile, no new 50x or 100x leverage traders above us, shorters, are trying to short this. And so that just continues. And then they ultimately get taken out. So this was this is similar to the example I was talking about earlier when I was showing when there's an imbalance. The only thing, again, guys, is you have to take in a lot of other things. This can't just be your sole thing you rely on. I use several other tools, which I will be covering in future lessons of this series. One of them being the vector candles, which I'm also going to cover, but this video is just about liquidity, or liquidation levels. So Here, I wouldn't have, even though we saw that imbalance here, I wouldn't have took the short because we're sitting right under all these liquidations. You know, there's still a lot of incentive to continue pushing price up. Let's say we had taken out the liquidation levels and there was no further liquidation levels here, and a sell wall might have popped up here also, and we saw that imbalance here, then I might have taken a short-term scalp trade, you know, for a move like this, which is not bad, you know, 2.4%. But on this current setup, you know, just because we saw the imbalance, I wouldn't have taken a short there because you're sitting right under a lot of fuel to continue going up. So that's what ended up happening for that trade setup. And then, yeah, price just ended up, I think we ended up coming up here and then coming back down. But now you should have a basic understanding of how liquidity works in crypto. Now you should have a better understanding of the role liquidity plays in crypto, and also how market maker is motivated by these liquidation levels, and also how you might be able to use it to improve your current trading strategy, whether that's your helping with your entries or helping with finding better take profit targets. You should be more familiar with the liquidation heat map by Coinank, and also the indicator by Leviathan. The last thing I'm going to end this video on is, you know, again, to sum things up, first you want to identify your high liquidity zones using Coinank's heat map. Then you want to cross-check those zones with Leviathan's indicator here on TradingView for precision or accuracy. You want to plan your trades anticipating that market makers will move price towards these liquidity pools, either entering ahead of these moves or waiting for reactions from these zones to enter safer trades. And of course, you know, market maker is skilled at creating false signals. You want to use these liquidity tools in combination with solid market structure analysis, momentum indicators, and responsible risk management to protect your account. If you haven't noticed the banner above us, it says I trade live on Phemex. Phemex has been my go-to exchange for a while. I've had nothing but a great experience on Phemex. They have great support. I've never seen any scam wicks or anything of that nature on Phemex. And also the UI is great. You know, I scalp, so, you know, I'm pretty in and out. I got to be really quick, precise, and yeah, Phemex's UI is really friendly for scalping. So I highly recommend it. If you're interested in leverage trading, there's a link below. You can sign up. Also, I will be live streaming my trades here on YouTube. I'll be trading on Phemex. So feel free to follow me, subscribe, turn on those notifications, stay locked in. And here soon, I'll be trading live, showing my setups, my entries, my exits. And I'll be adding more lessons to this series as well. Thanks.